If you're an individual or company looking to raise capital for your next multifamily real estate investment or private equity fund, consider using self-directed IRAs as part of your strategy when you speak with your investors. My name is Scott Maurer. I'm the Director of Business Development for Advanta IRA. If you have any questions on the contents of this presentation or other issues related to self-directed IRAs, please call me or email me, or you can visit our website at advantaira.com for more information. With over $9 trillion in IRAs and another $15 trillion in 401ks, defined benefits, and 403b plans, retirement plans are often an untapped resource for individuals looking to raise private money. Only 4% of retirement funds are considered to be in a self-directed account, where individuals have the ability to choose from a variety of different types of assets, rather than being limited to those investments that the particular custodian will hold for them. The gains that are made inside of an IRA do not affect an individual's personal tax return. So an individual who's looking at investing into a multifamily project or potential private equity fund does not have to worry about the income from that investment affecting their personal tax return if they are using a self-directed IRA to do so. Most professionals that have private defined benefit plans and 401k plans often have cash looking to invest in different alternative assets, and self-directed IRAs become a very popular source for individuals with those types of plans as well. Why haven't you heard of a self-directed IRA? Perhaps the biggest reason, and I've alluded to it already, was that most IRAs and most retirement funds are administered by banks and brokerage firms that offer them limited investment products. IRS regulations allow for a much broader range of investments, but you have to have a right custodian willing to hold your typical alternative asset. As banks and brokerage firms make money from buying and selling mutual funds, stocks, and bonds within your particular portfolio, they're not going to allow you to stretch your IRA and invest into other assets outside of what's available on their particular platform. But Advanta IRA is a custodian uniquely positioned to hold these types of alternative assets. Self-directed IRAs give their owners complete control over the retirement funds and investing decisions. It allows you to use, for the IRA owner, it allows them to use these IRA funds to invest in alternative assets that include real estate, mortgages and notes, private placements, precious metals, foreign currency, and much more. Even looking at the category of real estate, individuals can use IRA funds to invest in anything from a single family home that you're buying for rental or for rehab, to duplexes, multifamily syndications, tax liens, and so much more. Again, what a self-directed IRA gives in the individual is to get outside of the publicly traded asset market, getting away from mutual funds and stocks, and pick an investment and choose to invest in assets that they feel more comfortable with or hopefully will yield a better return. If you are looking to raise capital, how can Advanta IRA help you? Now, it's very important to understand that we cannot endorse or suggest any particular investments to our clients, but we will try to provide you with as many tools as possible to help educate not only you, but also your investors about the benefits of using self-directed IRA accounts. We do so, we host private webinars where we can come on your platform, talk to your contacts about how IRAs can be used and how old 401k plans can be used in this particular manner. So if you have an existing database that you'd like to educate about self-directed IRAs as a potential next source for the investments into your particular fund or particular asset class, we can certainly come on and do a private webinar and explain how the process works and how simple it really is. We also offer a concierge service where we have one point of contact, not only for you as the referral partner, but also for all of your clients as well. We will appoint each account to an account manager, who's that one person who will help that client throughout anything they need regarding their particular account and investment. And that same point of contact will also be your relationship as a referral partner. So when dealing with that one person, it makes the process run much more smoothly, and there's a lot of continuity, and it makes it very easy for everyone involved. We can also provide a private landing page that we host and create using your logo and your information that you can use in your email blast. You can place the link on your website to help inform, again, your investors or prospective investors about the ability to use their IRA account to make an investment in your particular deal. Here's an example of a landing page that we created for a company a few years ago. Again, we're happy to provide this free of charge for anyone who would like one. And we just ask again that you either use this link on your website or an email blast out to your partners and your investors. Why do people choose to self-direct? I think it's important when we're talking to individuals about how they can use their IRA funds to invest, typically what their motivations might be to use the IRA funds in that particular manner. For a lot of investors, the IRA simply provides a new source of capital for investments that they're already comfortable making. So if you have an existing database of investors who have already placed some of their funds with you, introducing the concept of using their IRA to make their next investment with you simply allows them to unlock different money they can use for that particular investment. So for some people who are self-directing, they are already investing into private equity funds or investing into multifamily real estate, or they're buying single-family homes, and the IRA is for simply providing them with a different source of capital to take advantage of that next investment opportunity. For a large number of individuals, they're also choosing to self-direct because they're fatigued with the stock market, the ups and downs, the roller coaster, watching their 401k go up and down due to global events and things beyond their control. A lot of people then choose to look to self-direction as a way to gain more control and get some of their money at least out of the stock market and into assets that allow them to sleep better at night. And certainly there's the tax benefit of investing with a self-directed IRA, as it exists with any type of IRA account, in that the benefits, the rents, the dividends, the profits coming back from an investment come back into the IRA either tax deferred or tax free. So that means all the income that is being generated from your particular project is flowing back to their IRA account. It is not affecting that individual's personal tax return on an annual basis. So for individuals in higher tax brackets, using a retirement plan to invest may be a welcome alternative, so that the investment is a tax neutral event for them, as all the proceeds are simply going back to their IRA account. Now, as far as what accounts can be self-directed, any type of IRA account. So if you're talking to investors and you're wanting to know what monies may be eligible for this type of investing, any type of IRA, whether it's a traditional or Roth IRA for individuals, for small business owners that may have a SEP or a simple IRA, those can also be self-directed. In addition to the IRA accounts at Advanta, we also offer an individual solo 401k plan, also referred to as a QRP. We offer education and health savings accounts. And also, it's important to remember that any former employer plan, the old 401ks, 403bs, 457 plans, those can also be rolled over into a traditional IRA and in turn self-directed. That's a big area, I think, where people looking to raise capital can be successful, as individuals when they leave employment and they have that old 401k plan sitting there. A lot of times it gets forgotten about, or people just let it sit there. That money can certainly be rolled over into a traditional IRA and then in turn be used for self-directed assets. How to move money to a self-directed IRA? This is a question we get asked quite often by individuals when they're looking to open up their account. Generally happens in one of two ways, either by transfer or direct rollover. Now, both transfers and direct rollovers are tax-free movements of money from one retirement account to another. It's just different terminology depending on what type of an account is involved that is coming over to the self-directed account. If it's going from an IRA to an IRA, it's considered a transfer. If the money is coming from an old 401k and old 403b plan to an IRA, that's just considered a direct rollover. Again, both are non-taxable events. There's very little tax reporting that's even done, and the individual has the flexibility to do as many transfers or rollovers as they wish, as long as the right paperwork goes back and forth each time between the custodians. So what that means is self-directing an IRA account is not an all or nothing strategy. An individual can certainly use just a portion of their existing account, transfer it to a self-directed IRA, and in turn make the investment into your private fund. The process can take anywhere from a few days to a few weeks, just depending on the other custodian and the type of account that is involved. Why are IRAs a good sources of capital? I think there's a few different reasons that individuals will find that IRAs can be good sources of capital when you're on the raising side of the business. One, and I've alluded to it already, repeat investors, people who have already invested into your fund, who you've already are sold on your investment idea and your processes. You can simply go back to that existing database, let them know what a self-directed IRA is, and hopefully then unlock again more capital from them by simply showing them a different way to invest in your next particular project. Also, there's no outside approval needed. The IRA owner themselves just simply decides if they want to use their IRA account, and then at that point, it's simply a matter of filling out paperwork, to make that happen. There is no approval needed from a brokerage firm. There's no approval needed from a financial advisor. It's simply the IRA owner making that decision and filling out the paperwork to make it happen. A lot of IRAs, especially with individuals who are sitting out right now from the stock market, who have their money in a CD or a money market account earning 1, maybe 2%. Hopefully, you're offering them better returns and diversification for the investments that you're offering. So individuals who have money in those accounts looking, know that earning 1 or 2% is not a good long-term strategy, but they're afraid simply to jump back into the stock market. And if you're out there soliciting for a private equity fund or a real estate investment, hopefully you're showing them better returns and a way to diversify and actually get their money invested and working for them without having to put that money back into the stock market, which they are possibly a little afraid of or a little touchy on putting their money back in. Another big reason that I think a lot of individuals are not expecting to use their IRA or their 401k funds anytime soon. They may have 15, 20 years to retirement, at which point they will look to pull money out of their account. But for right now, they don't mind locking up some of their cash in an illiquid investment for 3, 5, maybe even 10 years, depending on the length of your project. Individuals may be more reluctant to touch their personal savings account, which is their rainy day fund. If anything were to happen regarding their job or maybe their health, that's the money that they need immediate access to. But with their IRAs and 401k funds, that's a great place to hold an illiquid investment since they weren't planning on touching that money for several years in the future. When it comes to raising capital, we've seen capital raised in a number of different ways here at Advanta over the years. For some individuals, it comes in the form of a note, where the IRA is a lender, and the IRA is involved in either a joint venture agreement, maybe a mortgage loan, an unsecured note, or option contract. So it's more of a one-on-one deal with the IRA as its own investing entity and their particular investment sponsor. It could just be an individual raising money to flip a house or raising money for their own private company, and that can simply be accomplished in the form of a basic note. We've also seen far more, though, investments where it's a hedge fund or other type of private offering that comes with subscription agreements and subscription documents and a private placement memorandum that outlines all the risks and potential rewards involved in the investment. These typical funds are usually set up for accredited investors, and there might be a minimum financial requirement, basically a low amount that an individual has to make, an initial amount that an individual has to make with their IRA account to become an investor. So some of these funds we've seen set up again for private equity deals. Some of the multifamily syndications typically are set up with subscription documents where the IRA is actually the subscriber. We've also seen individuals raise capital with private partnerships or sometimes using LLCs, where it's the IRA and another person or maybe a few other people. Maybe there's some accredited, not accredited individuals involved. And it may just come in the form of a simple partnership agreement or forming an LLC where the IRA is one of the partners or one of the members of the LLC. Sometimes there are subscription agreements, other times there are not. It can be a less formal arrangement, but still a way for individuals to join their funds together to make a particular investment. Again, if you're looking to raise capital, whether you use notes, whether you have a subscription agreement and a private fund, or that you like to just form partnerships, just remember that the IRA can be that other person, that other investor for you when you're looking to raise capital. And we'll go through a couple of case studies that show and illustrate what the process looks like for using an IRA account to make these particular investments. This first case study is an equity partnership between Andrea and Steve. Andrea is the one with the cash. She has that money inside her IRA account. Steve is the one with the investment idea or possibly the actual investment itself. And in this case, he needs a project, or he has a project that needs funding. Steve is a local flipper. He likes to buy and rehab houses, turn them over, make a profit, and needs cash and capital for this next particular project. Andrea has money in her IRA. She would like to be involved in the real estate game, but again, maybe she doesn't have the know-how or the time to commit to rehabbing and flipping a house. So Andrea has the cash. Steve has the investment. Andrea does her due diligence on Steve to make sure that she's comfortable with him as an investor that she's willing to place her money with. And she's also doing due diligence on the property that he is looking to flip. Steve agrees to give the property to Andrea as a collateral. So this investment will take the form of a mortgage loan, and he'll actually use some of his own funds as a down payment as well on the property. Andrea agrees to loan him the remaining amount of money he needs to not only acquire the property, but to flip it and rehab it as well. So the loan terms in this particular investment, Andrea loans Steve $125,000. She sets the interest rate at 5%, which is fairly low for a rehab loan on a piece of real estate. But she increases her potential profits by asking for some equity participation. So when Steve sells this property, he is going to have to pay, in addition to the 5% interest, also 1/3 of any profits back to Andrea's IRA account. It's a 2-year balloon, as we noted. There is a first mortgage on the property, so Andrea has collateral in the event that this project goes awry. So the terms that goes in, the terms of the loan are negotiated between Andrea and between Steve. Andrea could have asked for a higher interest rate and less profits or no profits, or maybe this was it could be a straight equity participation deal where she simply puts the money in and they're going to split profits according to whatever they agreed upon. It is completely up to Andrea and Steve to determine what those loan terms would be. Andrea is going to have her attorney prepare the note and mortgage documents and approve those documents and have them sent to Advanta IRA. Our role will be to review the paperwork, make sure that Andrea's IRA is properly listed as the lender, and again, make sure that the terms match what she has told us that they would be. So we will look over the note and mortgage and make sure that these simple terms show up in that particular document. And ultimately, we do hold the note. And once Andrea has approved the documents, we will release the cash out of her IRA to make this investment and send that money either to Steve or to the title company attorney that is handling the closing. We fast forward 6 months. Steve is ready to sell the property. He's going to request the payoff amount. Andrea will help provide what that amount will be to satisfy the mortgage that her IRA holds on this property. And in this case, her IRA gets repaid its principal. She gets the monthly payments during that 6-month period of time, and she gets 1/3 of the profits, and basically resulting in a nice earnings back into her IRA account for the time this investment was made. On Steve's side of things, he still was able to take that loan, sell the house, repay her loan, repay those profits and interest, and still walk away with some earnings. So we had Steve who needed capital just on an individual basis and was able to tap into some by letting Andrea know that her IRA could be used to fund his next particular rehab deal. One of the other common ways we see capital raised, especially in the area of real estate, is investing in syndications or other types of private placements. In this particular case study, we have Jane and Randy. Jane, in this case, is the one with the cash. Randy is the one who has the particular deal. And Jane has her IRA with Vanguard. Randy has a private offering. So he's going to purchase and remodel an apartment complex that he's hoping to reposition and then possibly either sell or refinance, at which point Jane's IRA may be paid off and be satisfied out of the deal. Randy, in forming this particular offering, has had a private placement memorandum drafted and subscription documents, and he provides those to Jane to make sure she reviews them and is satisfied with the particular investment. Again, it's going to be up to Jane to review the prospectus, review Randy's numbers, and make sure that this is an investment that she wants to take part in. If she is comfortable with the deal, Jane's steps will be to open up her Advanta IRA account, filling out the paperwork with us to simply get the account opened and to request a transfer of funds from Vanguard. Again, moving the money from her Vanguard IRA to Advanta is a non-taxable event to get that money moved over. Our role will be to help her set up the account and submit that transfer request to Vanguard to move that money over, and we will notify her when those funds arrive. The other step Advanta will assist with, and again, if you're someone who's looking at raising capital, this is something the account manager will do for all of your investors, which makes this process very, very easy and simple, is the account manager will work with Jane, and also in this case with Randy, to make sure that the private placement and subscription documents get completed in the name of the IRA account. So the subscriber is Advanta IRA for the benefit of Jane Smith's IRA. That is the legal wording we make sure appears on all of the documents. And the tax ID number that is used is Advanta's trust tax ID number, not Jane's social. That way, any income, any distributions, any profits will be reported back to her IRA account and not to Jane as an individual. Now, again, it's important that Jane is going to review and approve all of the subscription paperwork for the investment. Again, do her due diligence on the project and on Randy, and then maybe any other principals are involved as well. Once she has approved the documents, we will sign them and wire money out of her account to fund the particular investment. Going forward, as the monthly or quarterly distributions are paid, those will come back and be deposited back into Jane's IRA. And again, the income going back to her IRA account is not included in her income. That's one of the benefits of using a retirement plan again, is that the investment income does not show up on the individual's personal tax return. And once her IRA exits the investment, or if the investment sells, again, all the proceeds will come back to her IRA account. No tax consequences to Jane as an individual. So if you're looking to raise capital, you're looking to get started, we encourage you to please give us a call at Advanta IRA. We have over 20 years experience in the industry. We have over $1.3 billion in assets that we hold under management for our clients. And again, as I mentioned, we separate ourselves from other self-directed companies by the service that we provide. Giving every individual account holder and every referral source that one point of contact with a dedicated account manager, again, that makes the process much more smooth and easy, not only again for the actual investor themselves, but the referral source and referral partner. We also offer a number of educational offerings. We do private seminars, live seminars, webinars, networking events, and live lunch and learn events at our offices in Atlanta and Tampa. And we work with people nationwide. And some of our events oftentimes will feature guest speakers, attorneys, CPAs, property managers, real estate investment providers, et cetera, that help spread and give more information about issues related to self-directed IRAs. And you can watch any of our recorded webinars that we've done with those various guests on our Advanta IRA On Demand channel. You can go to our website at advantaira.com, click on the YouTube logo, and it'll take you right to our YouTube page, which has the library of all of those videos, all of those webinars we've hosted over the years. If you have any questions and would like some more information either on how to raise capital for your deal and what Advanta can do to help you, or maybe if you're an investor looking to raise or looking to invest with an individual who's raising capital, please give me a call. Again, my name is Scott Maurer. I'm the Director of Business Development for Advanta IRA. Please call me or email, or again, you can visit our website at advantaira.com.